Today is Wednesday, May the 15th, and we started the day underwater, but it didn't take long. By 10 o'clock, the markets had gotten a tweet from the president saying that he was going to delay auto tariffs. And remember what we talked about yesterday and what Jim Cramer said? He said he doesn't trust this market because it's at the whim of a tweet from the president. And that's what turned it around today. So the market is not to be trusted. But we had a mainly green day where advancers led decliners by about 2 to 1. And the Dow had below average volume, so did the NASDAQ, so did the S&P, but they all finished higher. And technology and consumer goods look like they led the way, with financials being and utilities being the weakest. So we started the day with the daily oscillator, having had this huge jump from this double bottom here. Isn't that interesting, where the oscillator down here was the same as here, and then we had the rebound. So today we're going higher again. And, if we don't hit zero, we'll be pretty close to the zero line. So we talked about, some chatter between these two lines, and that's what we were going to play for a while. But having had this double bottom in the McClellan oscillator, that's a good sign that there's still an opportunity for more upward movement. So looking at the charts, the S&P was rejected by this blue solid 50-day exponential moving average. So be careful, always watch your 50 and your 200. And since some people like the exponential, which is the solid line, and some people like the simple moving average, which is the dashed line, I have all four of them. But in the case, look what we have right here. We have a convergence of the 50 exponential moving average, the 50 simple moving average, and the 8-day exponential moving average, the 8 EMA, are all coinciding right here. So that's a bit of resistance. So we want to see a break of 28.6449. So we can put on an alert and say that we're looking for price to touch an indicator, which would be the 8-day EMA. I want to keep it at the 8-day EMA. So I'm going to do the 50-day SMA because that is exactly the same as the 8 EMA. See them, they converge right here. And I'm going to do multiple triggers on that in case I'm away from my computer. And on the weekly, remember, we've still got the 200 and the exponential and the 200 simple and the flat cloud. And we also have weekly support for the Chiku span where? Right here, which of course is the top of the cloud. So we've got all these things happening, all these things converging, and we've got some convergence here in terms of moving averages. So the charts would say chatter, tough getting over these three different averages. And the charts would say there's a strong pull to 2772. So little steps, or maybe one big down step. It doesn't take much. It just takes an invasion of Iran or another tweet from the president. And there we have it. Apple is moving nicely into this gap. Some people say that gaps, the tails on gaps matter. And if that's true, then we only have a little bit more to go. And that little bit more is also the 200-day moving average, which would close the gap, which would mean that we would get some selling happening right here. So let's put a trade alert there, not a trade alert, but just an alert where price touches the 200-day simple moving average. And that's going to be right here. And so we can consider, I suppose we can consider that gap as being closed. But if it goes any higher tomorrow, I'm going to bring it back to the original gap. Amazon had a big day, up 1.7%, bounced off the 50-day simple moving average. We've seen that a lot. Caterpillar Still rejected twice from this gap, and this gap was caused by the China deal falling apart on Friday. So you had this big drop on Monday, and then the president bad-mouthing Caterpillar, saying that they should be building in the United States and people shouldn't buy from Caterpillar. No comment. GDX, Google, big day for Google. Look at the size of that candle. This is an engulfing candle, so it was bigger than, it had a range that was bigger than yesterday's low and yesterday's high. And it's actually bigger than the past 2 days. It didn't take out Monday, but we have an engulfing candle over 2 days. That's a pretty bullish sign, but we did see resistance just at the 38.2% retrace from this low to that high. So watch that. The next one I want to go to is Intel. Whoa, something happened with my Intel. It's showing 0. I'm going to have to clear my local data and reload the data. Still a bit of a problem. Oh, there it is. 45.68 is back. So we're looking at Intel having made, let's look at its, we're looking at Intel having found a bounce here. We have to find Wish chart. Helped it make its bounce, but it's still not a stock that I would be looking at right away. WDC rejection at the bottom of the daily cloud, but look what happened Monday when we had this drop. Of course, that was the drop because of the China trade deals falling apart on Friday. We had a bounce on the bottom of the cloud by the Chiku span. So that's an important level. When we hit that level, that meant the Chiku span found support in the cloud and bounced. Now we're getting rejection at the top of the cloud. The cloud is getting thinner, so if price just continues to move up along this cloud, it will pick a spot where that will mean the Chiku span keeps moving up in the cloud, and it will find a spot where resistance is thinner and it may pop through. So very dependent on news coming out of China. So let's wait and see, but this looks good for WDC to do a bit of recovering. Whirlpool, we did say on Monday that if you bought some with this bounce off of the 200 and put your stop below the 200, you'd be okay. Said this morning that on Twitter that the resistance was just at the bottom of the cloud. So same like WDC, we could find as the days go by, Thursday and Friday, we're going to get resistance at the bottom of the cloud. So I'm going to remember this spot by putting an alert and saying that I want the price to cross the Senku span B, which is the bottom of the cloud in its normal unreversed situation. This is the Senku span A. This is the Senku span B. When the cloud reverses, the Senku span B is at the top, and the Senku span A is at the bottom. So we're going to look for Whirlpool to hit that, and that might be an opportunity for you people who bought at the 200 to sell and wait for a little pullback to buy again, or just put a tight stop once we get rejection off the cloud again. So I would say that if you hit 131.79 tomorrow and there's a rejection, sell a little bit, wait for a pullback. Use one of your shorter time frames, maybe the 5-minute, maybe the 1 hour. 1 hour isn't very informative, except look at that resistance on this candle. So if we can get up to that price, which we said was 131.86, if we get up to 131.86, that's right up here. That's over this candle. That means we're above the candles, and that's a good sign. So those are some of our indicators for tomorrow.